Right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk a little bit about Powell and yesterday the speech. I also want to talk a little bit about inflation and the things I'm watching for as we head into the CPI print next week. Then I'm going to show you some really bullish things for Bitcoin. I still think people are not quite bullish enough, and I also still think that people are a little bit too close-minded about the standard 4-year halving cycle shape. So I'm going to talk a little bit about this, show you some confluence of things that I see across the board for Bitcoin, and I may touch on a couple of charts, but ultimately, since it's Friday, and I don't like to take on new positions on a Friday and take on the weekend risk, and also since we always come back on a Saturday and examine all the closes following the week, then I don't think we need to spend too much time on the charts today. So without further ado, look, Powell spoke yesterday, and this was the narrative for the dip. Remember, every dip has its narrative. Stocks sold off following Powell's speech, and largely because Powell said that the Fed is not quite confident it's done enough to bring inflation down. And of course, we're going to talk about this because there are some early warning signs in terms of inflation. But the key take home for me, okay, is arguably the most powerful monetary policy influencer and possibly the most powerful man in the world of finance said this earlier, right? If you haven't seen it, go and look it up. It's pretty funny. But this is all anyone cares about, okay? He said all of that stuff from his speech. He was talking about interest rates, talking about inflation being sticky and blah, blah, blah. And if you go around Twitter, no one cares, okay? No one cares about anything he said other than the fact he said to someone to go and close the door, right? So it's pretty funny that basically his words mean nothing, okay? His words mean nothing. Markets do not care about what this man has to say. And whilst the news and the headlines will have you believe that, you know, he says stuff like he's not confident about inflation and that's what causes the dip, really, it's likely just a shakeout. It's likely just a bit of a reset following what has been a massively bullish week. And the bull trend likely resumes in the not too distant future. With all that said, I think it's important to keep a very close eye coming into CPI next week. And the reason I say that is we are creeping back up again at 3%, okay? So to clarify exactly what I mean when I tweeted this, I said, I want to see inflation coming down, and we were in the low 2% according to Trueflation not long ago, and now we currently sit over 3% again. Whilst some commodities are exhibiting deflationary looks, such as oil, corn, wheat, which is of course encouraging, I want to see Trueflation come down below 2 as soon as possible, and that is of course because the primary thesis for the market having the space to rally is that we continue to see interest rates held at a pause as a result of the inflation coming down and that pendulum swinging towards a deflationary environment. So it's going to be really important to look out to next week. I believe the CPI print comes out on the 14th, as it says here. So it'll be really important to see that inflation is not indeed sticky like the Fed is hinting at. Jay also here pointed out that the government shutdown is still on the table for the 17th of November. So again, worth keeping an eye on. I personally don't think this is going to be anything to worry about. But again, it certainly has the potential to cause some short-term volatility. So the focus of next week is going to be on CPI for me. And of course, once we get that CPI print, we'll get to find out whether or not this reprices left or right of the pause. I will also be keeping a keen eye on the credit spreads. At the moment, rejection at resistance, nothing at all similar to a financially stressed environment like we had back here. So overall, I don't really think much has changed. I know that, again, like the headlines suggest, everything is about to tank and everything's about to crash and all the doom posters and bears will be out in Twitter on full force. I don't really think that this changes the bull thesis at this moment in time. But if we start to see back-to-back increases in inflation, right? If we start to see CPI creep up and up and up, then potentially we have a different situation to the one that I have been proposing. Over in the world of crypto, Bitcoin is doing Bitcoin things, right? We're currently at 36.5k Bitcoin, and just imagine how many people are going to sell short into 40k because they believe we can't possibly make new all-time highs until post-halving, which is still a good 6 months away. This is going to be the fuel for the fire that takes us to new all-time highs by the end of this year. Now, if you don't agree with this, that's fine, okay? You don't have to agree with this, but you should, everyone should, if you're going to be a market participant, an investor, a trader, we all should be open to all possible outcomes. Absolutely everything is on the table, okay? And that includes all-time highs by the end of this year. If you've been here before, you know that I have been expecting new all-time highs at least before the halving. And the reason for that is because I'm a cycle trader and I've covered this in extensive detail. If you're unfamiliar with my work, then here's the video you need to go and see. Bitcoin's 4-year cycle trade is crowded. So go and watch that. That gives you a deep dive analysis of my case for why I have been expecting a left translated cycle top for Bitcoin that would look something like this, okay? Something like this. So far, we're pretty much on pace. We deviated when the fractal was originally in this neighborhood here, and we sort of broke away, and I said, maybe, maybe it's time to scratch this one off. But since then, we've been doing Bitcoin things, haven't we? So all the while we continue to do this, I continue to look for an exit early next year. Like I said, if you're unfamiliar with this work and this idea, then go and check that out. At least keep it in the back of your mind because it is one possibility. There's also confluence to my cycle top theory in the form of an Elliott wave count, okay? So we have this Elliott wave count, meaning that we are currently looking to put in the 3 of the 3 before a pullback and then the run to the 5 of the 5. Again, this speaks to a top that comes around the time of the halving, if not before, and again sets us up for a multi-year bear market decline. Now, it doesn't have to crash by 99% or 90% or 80%. It could only be a 30 to 50% decline. But from a cycle perspective, from a timing perspective, and from an Elliott wave perspective, we are likely going to see a multi-year bear market decline following this blow-off top move. And again, in trading, it's right until it's wrong. So far, it's right, okay? Again, start to base sideways, start to do something like this, then we can abandon this thesis and say, maybe we're going to do a standard 4-year halving cycle blow off top. But if we continue to do this, okay, what do you think is going to happen? You think it's just going to keep doing that? Absolutely not, okay? So be open to all outcomes. As you can see, there are multiple different strategies pointing to this being a serious possibility, and particularly if this happens and then the ETF is launched at the top, like I've been saying over and over again, we could well see this used as a distribution tool to suppress the price in the short term. Once we finally have this big drawdown, then we can load back up and look for that target of the multiple millions of dollars per coin. I'm not saying it will play out like this, I'm just saying this is one thing to be aware of, and like I said, unless we start to do this pretty soon, okay, into the halving, then this is on the table. Got even more confidence here because we've got the first yellow dot, okay? So have a good look at this. Have a very good look at this. If we continue to print yellow dots, they're going to very quickly turn orange and then red. And what happens when we get multiple red dots back to back? In a parabola, of course, that marks the local tops. So again, multiple factors all pointing to potentially seeing a parabola develop sooner rather than later, and then a top coming in sooner than people expect. If you think all of this is far too bullish, that's completely fine, okay? That's completely fine. But at least in the short term, we should still be open to seeing higher prices, okay? The measured move for the flagpole extended up gives us a target of $43,000. A lot of people are seeing this wick and saying, ha, told you it's already going to reverse, this comes next. Not necessarily, okay? We are still potentially a long, long way from the target being met, and that's just of this current move. Once we get here, I do expect quite a violent, nasty correction, but then from there, I expect the resumption of this parabolic uptrend. So it's been a pretty crazy week, hasn't it? Bitcoin continues to do Bitcoin things. There's still a lot of this froth in the market and this hype and this talk about ETFs, and we're even seeing BlackRock talking about launching an Ethereum ETF as well now. So to my mind, the only reason they would start to file for this is because they know the Bitcoin one is a done deal. It's also worth pointing out that an Ethereum ETF is an institution's wet dream. And the reason I say that is they can just give the investors, the ETF holders, the price appreciation or depreciation of the ETH coin. But they can slurp and keep all of the yield for themselves for free. So the Ethereum ETF could well be just another tool that transfers fiat from the retail over to the institutions. And in addition to that, this week continues to get more wild as Saylor is now up over $1 billion on his Bitcoin position. This week, we've also seen a whale buying $15 million of Bitcoin every 3 hours. So this move is largely spot driven, despite a lot of people hoping and praying that this is a manipulated move that's soon going to reverse. It's probably not, okay? It's probably not, because the spot buying is heavy. So what a week. Dollar still looks weak, doesn't it? Euro dollar still breaking out, still moving up. Happy days there. 10-year yield, the chart of truth, look, playing out against my squiggle. I expect to see this roll over early next week, particularly as we see that CPI print and likely line up that pause. Of course, we have to be open to seeing a hotter CPI print, and if we do, then perhaps we get a little bit more relief out of this current bounce. Bitcoin still doing Bitcoin things, hasn't it? Look, it's still broken out, still continuing, so long and strong, continue to push. Gold, potential candidate for a swing low, or is this the start of a 2 drives pattern? A little bit more time, and we'll probably know early next week. Still pushing this oil short, aren't we? Not much more to say about that. Crypto-related equities look a little top-heavy after yesterday, but at the end of the day, right, if we flick it into line, so we get rid of all the wicks and stuff, what do you see? Okay, that's a breakout. It looks pretty good to me. Same deal for MicroStrategy. Closing bases only with the line chart, remember. How does that look to you? Because to me, looks pretty good. What about Riot? Again, trending up, and Marathon also trending up and to the right. Lastly, the stock market, okay, rejection at resistance. So it'll be interesting to know if we can hold this upward sloping red support line. It'll be interesting to know if we're going to roll over and backfill these gaps like I suggested we might. Stack, look, right back to break even. Are we going to fill these gaps? I talked about this multiple times. I said there's a good chance that we break out, retest and go. There's also a very good chance and an equal chance in my opinion that we break out, backfill these gaps from here and here, and we pay a stop and then we reverse and break out again and we take 2 attempts at this. That doesn't really matter, right? If I have to lose 1 to 2% in this stop loss right here, only to then get long again after we do something like this, okay? Get long again here with another 1 to 2% stop loss somewhere below. We're targeting, remember, fresh all-time highs up in this neighborhood for the final portion of the blow-off top rally. So it really doesn't matter, does it? Like I said, all along, possible that it takes 2 attempts. Also equally possible that this is breakout or retest, looking for that resumption and a lockout move to keep retail away from being able to accumulate inside of these gaps. The Dow Jones, again, are we going to backfill this gap? Are we going to take 2 attempts at this long? Or is this just breakout, retest, resumption of the downward sloping red resistance line? Time will tell as always. Russell 2K, hopefully now you can see why we're patient, right? You can see that we wait for a breakout and we haven't got it yet. So is that coming next week? Do we do something like this and then go? Overall, we've made good progress with the VIX, haven't we? So right back in this neighborhood, anywhere in here, I think, sets us up for a move down next week. And once we get through the CPI print, assuming that thing is not freakishly high, then I think all systems are go for that run into the end of the year. I hope you found value here today. I hope you're doing well in life. I hope you're looking forward to your weekend as much as I am. And in the meantime, take care from me. All the best. Cheers. Bye.